Hello traders, this is Dion. Welcome to my channel. So in this video I want to talk about how to take counter trades. All right, so by the end of this video I want to show you the on the real chart how it's supposed to play out, how everything is supposed to come together so that you can take that trade confidently. All right, so if you are new to this channel, please consider subscribing, like this video, and join my free Telegram channel in the description below. All right, so if you know what structure mapping is, you are just mapping your structure to see where the market is going. You have to trade based on the direction of the market, but there are certain cases where a trade is in a certain zone, it's reacting to a certain zone like these zones here. Okay, but since you only know how to trade with the trend, what you discover is that you'll be missing a lot of trades. And another thing is that if you don't know where the market is reacting, even if you were even if you were trading just based on market direction, you'll be getting some losses where you don't know why price reacted a certain way. All right, hope that makes sense. So you have to know why the price is reacting a certain way at a certain point. So that's what this video is about. So here, if you know how to map your structure like this is okay. All right, you know where inducement is, you know all those change of character, break of structure and such, that is fine. But that is not what SMC is all about. Okay, that is not the full package for SMC. All right, you still, when I say SMC, smart money, you need to be smart to be taking these, to be making these decisions. So these zones, it's not even complicated. Let no one even lie to you. It's not complicated. What you need to be doing. So for me, I map my structure on the 15-minute time frame. So the two bias that I use, it's 4 and the daily. All right, those are the two higher time frames that I use for my bias. You can't uh you can't really know what is happening if you are just looking at the 15-minute time frame. It's very hard for you. You'll just be guessing. You'll be telling yourself stuff like maybe the sellers here they were tired here, now the buyers came in, stuff like that. No, it's not that. Right, you have to look at what is happening on the higher time frames. So what you discover is that when you're on this analysis time frame and then when you go to the 4-hour chart, you might discover that there's maybe an order block. It may even be a mitigated order block. Sometimes the market just comes, it's just testing a certain order block. Yeah, now the thing is, you don't even need that order block to be unmitigated. What you need is just something where the market might react to, because you are not expecting the market to bounce off that order block or fair value gap and then go all the way to the upside. No, the thing is, your analysis time frame is telling you that this is a downtrend. So there's no need for you to expect the price to go all the way to the upside, but you need to expect this movement. It doesn't matter how small that movement is going to be, but you need to expect it. At least you have an idea of where the market is reacting to. Okay, so it's not just the 4-hour time frame, even the daily, especially the daily fair. I like the daily fair value gaps and the daily single candle order blocks. They work both ways actually, in counter trend and also when you are going with a trend. All right. So it's not just, they just help you figure out where the price is reacting to, where the price is coming from, and where it might go to. So those are some of the things that you need to really consider if you are trying to be profitable in a long run, not not in a short run. Yeah. So this one, maybe let's say this was the 4 hour. This is the 4 hour fair value gap or order block. Okay. This one may be the daily order block. Maybe this one is the daily fair value gap. Now, sometimes sometimes the daily and the 4 hour chart, they all come together sometimes. So you might have this 4 hour order block, and then when you look at the daily chart, maybe the daily chart is saying there's a fair value gap, or maybe there's another order block on the daily. Okay, this is actually good for you. This is actually good for you when things come together, like there may be a single candle order block on the daily. This is what we call confluence. This just helps you take, if you are looking for a buy here, even if you know that your analysis time frame is bearish, you have a lot more confidence to take trades here because of what's happening on the hard time frames. Now you still need to pair that with the trading sessions and everything. You have to look for entry setups and everything. You don't just have to jump in just because it's in this zone. All right. Okay, let's go to the real chat. I don't want this to be a long video. All right, this is the real chart. So this is the GBP USD pair, currency pair, and it's obviously in a downtrend because it's breaking structure to the downside. Now, if you were trading this last week, maybe you just concentrated on looking for these order blocks up there. Okay, maybe you were just looking for these. Okay, these POIs. Maybe that's what you are looking for only. Of course, that's okay. These are high quality trades. If you are trading that, that's fine, right? But there are certain days where the market does not go to those points of interest, and then you can wait for even for 4 days. The price hasn't gone to your, especially if you are trading the premiums and discount zones, price doesn't go to those zones, and then you stay like for 4 days you've never taken a trade, and then when you take that trade it even goes against you. It just gives you those frustrations, and then you start making bad decisions. That's how we start losing money. So counter, so I'm only focused on these counter. This is not counter trade. As you can tell, the market was breaking structure to the upside, so this is not counter trade. This was going with a trade, with a trend, I mean. So let's just concentrate on these points here. This one, okay. I can take this one, and this one down here. Okay. So when you go down to, I'll start with the 4 hour chart, just in case. Okay. So these are the points that we are concentrating on. When you go all the way back here, here you can see where the market was reacting to. Okay. I said when it comes to, you don't even necessarily need an unmitigated order block. Okay, look for where price was reacting, because you what you are looking for is not an order block or fair value gap that is going to hold this position for long to a point where the market like reacts to it and then starts going all the way to the upside. No, that's not what we are looking for. What we are looking for is just that small reaction, which makes a huge difference on the lower time frames. Okay, so you had this single candle order block right here. Okay, market was reacting to that. Now, okay, so this is the 4 hour. This is the 4 hour single candle order block. All right. Now, on the lower time frame, on the 15-minute chart, your analysis time frame here, there was already a change of character. Okay, so this is what I mean by counter trend. The market is already in this 4 hour single candle order block, but on the analysis time frame, you already know that this is a downtrend. This movement on the lower time frame, let's go to 15-minute chart. This movement right here, you don't need a big movement like it goes all the way up. Okay, like maybe even take out that high there. No, this small movement is what you need. You just need to know how to manage that trade. Okay, maybe your target was just this high here. If your target was just this high, you are done. You're even done for the day. But you didn't take a random trade. If someone ever asked you why you took this trade, at least you'll be able to explain, okay, I took it because of the bias, and then you also put everything together, maybe even paid with time. And what here you can see around this area here, this was New York. So here it just retested the order block right there. It just came back, and then yeah, don't want to get into entries, but I want you to know exactly what's happening on the high time frames. So let's go to the 4 hour chart. I mean the daily. Okay, so here the only thing that we had was the 4 hour single candle order block. All right. Now, when it comes to these other two, these two levels there, let me remove that. These two here, you can see there's a fair value gap. There's a fair value gap here. This is the daily fair value gap. Okay, daily fair value gap. On your analysis time frame, at least you have to know where the market is. Okay, the market may be going down, but it's supposed to react to some certain level for it to take out that inducement. Because while you are mapping your structure here, you expect the market to take out inducement at a certain point. Now, inducement won't just be taken out just on random places. All right, the market has to react to a certain level and then go and take out inducement. Okay, so at least you know on the daily there's something, there's a point where the market, these points are called them hotspots. Okay, because you expect the market to react a certain way. Yeah, so as you can see here, the market is still in this fair value gap. Now if you look down here, if you just look down here on the daily, okay, on the daily, let me remove this. You still have something down here. This is a single candle order block. So these things you have to be marking them in advance. Don't start marking your structures in the morning. In the morning, you are trying to take a trade, not analyze charts. After you close your trades, whether it was a loss, it was a win, what you need to be doing, if you don't want to be backtesting, try analyzing the market. Look at what the market might do tomorrow. Okay, have that projection so that when you wake up, at least you have something in your mind that the market might do this and that. It won't be too stressful for you, because it's really stressful when you wake up and then you start figuring out where the market is coming from, where it's reacting to, and all those. You make a lot of bad decisions in a split second, because all you are trying to do is enter a trade, and that trade is going to be a loss. That I can assure you. So try looking at the bigger picture if you're trying to take counter trades, or even if you are not taking those count, at least you have to know where the market is reacting. You have to know areas where why the market is moving in a certain way. Okay, guys, so for today, I think that is all I had for you. Join my free Telegram channel. It's very, very much free. All right, guys, happy trading. See you next time.